I'm Richard Southern for CantechLetter.com. Were you flipping through the TV channels aimlessly last weekend looking for something to watch? No, you probably weren't. Chances are you may have been watching something like Netflix or Amazon Prime or Disney Plus. Now, the way we're consuming TV is changing. And according to research firm Insider Intelligence, it's changing much faster than you may have ever imagined. The firm estimates that CTV, or connected television investment in the US, grew by a whopping 40.6% in 2020 to more than $9 billion. 60% of all US marketers with digital video in their media budgets are shifting this year from linear TV to connected television. So how does the savvy investor take advantage of this big trend? Well, enter newly listed Sabio. The company is listed on the TSX Venture Exchange under ticker SBIO. It offers a connected TV platform that's powered by mobile data. So it provides leading brands with the perfect balance between media, data, and technology. Joining us to explore the sector and the business is CEO Aziz Rahimtoola. Aziz, thanks for joining us.
Thank you, Richard, for having us on.
Aziz, how did Sabio get started? How did this all begin?
So Sabio means wise or experienced in Spanish. And my thinking was the fact that consumers, the way they were consuming content and the way they were really kind of taking in different inputs, the traditional methods of essentially reaching them, especially specifically Hispanic consumers initially, and then the broader market was inefficient. And so Sabio was created to really reach the Hispanic consumer initially from the apps that they had on their phone.
So what problem is the company trying to solve exactly?
It's really trying to solve two key problems. The first of which is efficiently reach consumers in a fragmented media world. So that's number one. Number two is actually being able to effectively measure those consumers once again, in a fragmented world. And that's really what the Sabio side is driven by the media reach portion of it, where we're trying to help brands and agencies reach those right customers and consumers. And then secondly, the App Science brand is focusing on the analytics and really helping brands and agencies understand, did they reach the customer? Did they effectively achieve their objectives instead of the traditional metrics we have today?
So how do you define the CTV market, the connected television market? Like, how big is it, Aziz?
The way we like looking at CTV market is defined by the TV market, which is roughly about $80 billion on an annual basis. And so our thinking is as traditional TV continues to erode rating points and consumers, the CTV market has the potential of really stepping in, as YouTube has, of taking a lot of those dollars their way.
So is there like a typical customer for Sabio?
Yeah, so what we traditionally, our perfect intersection is a customer who has some functionality, some business functionality on an app, and also has physical location visitation. So, financial institutions, for example, they have customers who use apps on a regular basis and also visit branches. And so the cross-section of those two worlds is really perfect for us, and similar to QSRs. QSRs is a great category because consumers are obviously ordering a lot of food takeout from their various food delivery apps, in addition to actually going to the store. So the combination of that is really our sweet spot. Is our view is an app, and the idea of understanding behaviors from an app perspective is really, really where we shine.
Now, I know Sabio has some really interesting mobile products. Can you tell me about your mobile products, Aziz?
Yeah, the mobile products are kind of was our core basis of understanding the consumer, and now that has led to this connecting of the consumer from a CTV and streaming perspective. And so mobile for us is a extension of what we're doing in CTV. It's the ability to reach that consumer lower down on the funnel relative to the high level branding that CTV and traditional TV offers.
So, the way we consume entertainment obviously is changing. How does Sabio position itself to profit from that, Aziz?
Really, it's about understanding the consumer from, of course, efficiently reaching the consumer, and once again, in a fragmented world, helping brands and agencies reach that consumer effectively. And that's the Sabio portion of the business. On the App Science business, it really is benefiting from this need to understand the consumer better and to understand the effectiveness and efficiency of your campaigns. And so that's how we're positioned, really focused in on monetizing streaming. And then secondly, actually being able to track and understand consumer behavior as it relates to those streaming products.
Now, you recently announced a 112% revenue growth this year. How did you accomplish that?
We're accomplishing it through actually streaming, monetization of streaming on TV and streaming on mobile. And really that is a growth area for us as a whole. We continue to see, we continue to make investments in that area and really see a lot of upside and a lot of potential in overall growth.
So Aziz, what's your margin mix looking like? And are you moving to higher margin offerings?
You know what, we're pretty satisfied with where the margins are today. I mean, based off our third quarter earnings, you can see our margin profile is roughly about 61%. And we just see that continue to stay stable, if not increasing slightly because of the SaaS component of our business. The analytics is, of course, high margin business, and that is continuing to start, and that's starting to see some growth there. So we're really happy about where the margins are today, but we certainly see an opportunity to continue to grow.
Right. And Sabio recently went public. I know you guys are on the venture exchange and you raised 6.6 million. Is that enough to fully execute your business plan? Or are you going to go back to the market again? What do you think?
You know, the reality is we're actually a profitable company, as you can see in our third quarter earnings. And really, we did this as an opportunity to raise a little capital, but the objective here was visibility. And really, we have the pieces in place. And now it's just, we simply needed a little bit of additional capital infusion to really accelerate on the growth. So yes, we feel like we have enough, but there's always an opportunity to, you know, as we look at potentially doing acquisitions down the road, which was the objective of this, of offering, you know, certainly that could be an opportunity to raise additional capital.
Right. So as you look out a little bit, what do you want to accomplish over the next 12 months? What's the goal over the next year?
A goal is really establishing, we're doing a great job of establishing our presence in the New York market. New York traditionally accounts for something along the lines of 70% of revenue for most of our competitors in the space. We're actually a late entry into that, so our percentage is fairly low. So the objective in the next 12 months is to continue growing that momentum we're seeing in New York on the media side, and then separately grow that on the analytics side. We believe we can be, we don't believe there's a need to be an alternative Nielsen. We believe we can be an additive to Nielsen in terms of what we're doing. And that's really what we're being recognized as the component to understand the component that someone like Nielsen is not very good at, of understanding the CTV consumer and the mobile consumer.
Super interesting business, Sabio. Check them out on the venture exchange, ticker SBIO. Aziz Rahimtoola, CEO, thank you so much for joining us. Appreciate it.
Thank you, Richard, for having us.